Every month, we write about a list of stocks to buy. We'll do something different this month. For the month of November, we'll talk about the top 10 stocks that you need to have in your investment portfolio. Aside from their impressive track records, these stocks possess market-beating potential, which is expected to last a long time. We'll explain to you why you should hold these foundational stocks for the long haul. They will still experience volatility, but we believe you can make the most out of their long-term staying power. The first stock on our list is CrowdStrike Holdings. CrowdStrike Holdings is gaining traction in the cybersecurity market. The cloud-based endpoint security company is scaling its business rapidly and has high double-digit growth to show for it. CrowdStrike Holdings coined the term security cloud, which refers to its approach to protecting its clients from various kinds of digital attacks. In this day and age, cybersecurity is a must. The company banks on that demand and uses artificial intelligence to identify and respond to all kinds of cybersecurity threats. The company offers its Falcon platform to businesses that want to streamline their cybersecurity. You should include this company in your portfolio because of its scalable financial position. Its expenses are decreasing and it's generating significant free cash flow. The company has been lauded for its excellent business practices. It has great reviews from Glassdoor, not to mention the company offers competitive compensation for its nearly 5,000 employees. Additionally, the company is poised to answer the demand for better computer security systems. CrowdStrike Holdings' Falcon platform offers various modules including cloud security, endpoint security, and identity protection. The second stock is Idexx Laboratories. Idexx Laboratories develops tests, diagnostic equipment, and other similar services for water testing and veterinary markets. The products and services they have to offer are used for various purposes ranging from household pets to livestock. Idexx may not be as flashy as biotech, but it managed to grow its revenue steadily in the past years. Over the past decade, the company reached a 561% return while S&P 500 only delivered 214%. Its impeccable performance is what makes this stock a good buy. It generated more than $2.5 billion in recurring revenue for its animal diagnostics in the last fiscal year, which marks a 19.9% from the figures reported in the previous year. The stock had a large pullback last year, making it an attractive buy if you're looking for a solid business to invest in. Idexx is a foundational stock that you should consider including in your portfolio because its business is highly profitable and presents sustainable cash flows. Its gross margin grew nearly 60% in the past 5 years while its net income margins grew more than 20%. The third stock is The Trade Desk. The Trade Desk was founded in 2009 and it has grown into a reputable brand in the advertising sector. It was one of the pioneers in digital advertising auctions and continues to improve its products and services to meet the demands of online advertising. The Trade Desk caters to advertisers and agencies who need programmatic advertising. They help their clients target users that may be interested in what they're offering. Its demand-side platform lets its clients optimize the money they spend on ads by finding audiences who may be interested in whatever it is that they're advertising. The global digital advertising spending may reach $600 billion by the end of 2022. The figure is poised to balloon to over $820 billion in 2025. The Trade Desk has managed to establish an excellent financial foundation in the past years. Its revenue has consistently increased every year since 2016. Its gross margin hit more than 81% by the end of 2021. The consistency in the Trade Desk's finances can be attributed to the master service agreements that it maintains with its clients. There's no minimum ad spending, but customers are allowed to sign up for value-add services, which would boost their use of the platform over time. Their customers seem to be pleased with this setup, given that the Trade Desk has an impressive client retention rate, which is more than 95%. Fourth on our list is Apple. Apple has long been one of the favorites of investors. It has a market value of over $2.7 trillion and reported an operating income that reached almost $1.9 billion in the 2021 fiscal year. The iPhone, which is the company's best-selling product, generates $192 billion in revenue. The company continues to innovate, and that means consumers will keep on buying its products and services. Despite problems with the economy, Apple continues to perform well. Fifth stock in our list is Amazon. Amazon managed to meet the demands of consumers after the pandemic started, as people preferred to shop online for safety reasons. Now that economies have reopened, the company's sales growth has started to slow down, but it's still at a significantly high level. You're probably wondering why you should buy this stock. First of all, it has a thriving cloud computing business. Amazon Web Services continues to offer high profit margins for the company. Amazon's advertising business is also growing. Its ad sales have increased by 25%, reaching $7.9 billion in the first quarter of this year. It's a lucrative business that benefits the company in general. Furthermore, the price of Amazon stocks is cheaper now compared to previous years, making it a good buy for investors looking to have a foundational stock in their portfolio. And the sixth stock is Snowflake. There are many reasons why you should buy Snowflake stocks. Its product revenue surged by 106% in the fiscal year 2022. The company expects to report another 68% increase for fiscal 2023. It also expects to reach $10 billion in product revenue by 2029, provided that it's successful in expanding its customer base and retaining high-value clients. Its customer base rose by 36% to 6,808 customers. The company looks promising and worth adding to your portfolio. The seventh stock is Atlassian. Atlassian has established an excellent reputation in collaboration tools and product development. Its Jira software family is the most popular one, as it features IT service management, project management, and enterprise planning. Atlassian's portfolio also includes Trello and Confluence. The company is doing well in fiscal 2022, which ended on June 30th. Atlassian saw its customer base increase by 18%. Its revenue increased by 3.4%, and its adjusted earnings also rose by 21%. The trend is expected to continue in the next fiscal year. The market that Atlassian caters to is currently worth $29 billion, and it's expected to grow in the coming years. The management believes it'll continue to grow by about 14% yearly, which means the company has the potential to scale even more in the future. 8 on our list is Walt Disney. Another great buy, which you must consider adding to your portfolio, is Walt Disney. It's still one of the world's strongest media companies. You're probably wondering why you should invest in the company. The answer is simple. Disney is a well-recognized brand that consumers love, and its media content library is consistently growing. Disney Plus, the company's own streaming service, now has 150 million subscribers and still growing. On top of that, the company also has ESPN Plus and Hulu, which comes to a total of 220 million subscribers. Disney expects its subscriber base to reach 250 million by 2024. This segment may be losing now because of the investments in its content, but the company is optimistic that it will reach break-even. Not only that, Disney has a lucrative studios segment, parks and experiences business, and consumer goods. The ninth stock is Nvidia. Nvidia has been showing terrific growth in the past few years. But its fiscal 2023 second quarter results show that the company is struggling. The graphics cards specialist already expected a drop because the gaming segment is showing some signs of weakness. Nvidia reported an increase of 3% in revenue to $6.7 billion. Some investors may be disappointed at the performance of the stocks, but those who look at the bigger picture expect the weakness in the gaming sector to end soon. The company's GeForce Now cloud gaming service is looking promising. It allows gamers to play games that are resource-intensive without having to purchase costly hardware. They just need a fast internet connection to access the games, which are remotely running in data centers. The number of subscribers for cloud gaming services is expected to increase to 58.6 million by 2024. Given that Nvidia has managed to build a solid position, It's expected to benefit from this massive growth provided that it continues to dominate this space. The 10th and final stock in our list is Tesla. Tesla's stock has increased by more than 1,800% in the past 3 years. The company is continuing to lead the way when it comes to electric vehicles. It's expanding its product portfolio. The company is looking forward to starting the deliveries of the Tesla semi-truck and the Cybertruck pickup model in 2023. Tesla is also working on a more affordable electric vehicle. Tesla is also scaling its energy segment. Its massive factories have increased the production of its EV batteries as well as solar systems and battery storage, which it sells separately to interested clients. Hopefully, this video has helped you gain more information about the stocks that you may consider adding to your portfolio. These are well-performing, stable, and promising stocks that are worth buying and holding for the long haul. Thank you for staying until the end of this video. Please click the like and share button. If you have anything to add to the list or just want to say hi, feel free to leave your comments below. We love to hear from you. Thank you for watching, and remember, always stay very motivated.